Welcome back to price action trading series from Market Secrets. This is episode 44 of the series, and in this episode, we are going to learn about trading using SD ranges. Before we get into today's session, we'd like to highlight that Market Secrets has recently launched Algo Trading. So if you are someone who is interested in learning and doing algo trading on your own using Python, then you can enroll to our program. I'll leave the link to it in the description section of this video. And with that note, let's jump into today's session. How to trade when monthly and weekly charts are too high in the monthly and weekly range. For example, consider supply zone is in control, that is a monthly supply zone is in control, and there is a clear downtrend in the monthly chart. In such cases, we can't go long against this monthly downtrend. And there is higher time frame supply in control as well, that is monthly supply is in control. So the price would be testing the demand zones. So if the price is still within the monthly supply boundaries, that is monthly SD range, then you cannot go long. So what to do in such cases? In such cases, you need to wait for the areas of supply on our entry time frame. So you need to look for shorts in the daily time frame. That is how you need to trade in such cases. So all the actions that we take while trading should be purely based on the multiple time frame analysis. So would you take a short at a random daily supply zone? Would you do it just because it's a supply zone? No, there must be other reasons to pull the trigger. You cannot just spot a daily supply zone and directly take a short over there. No, that is not allowed. You need to have the proper reasons to pull the trigger. So what could be those reasons? Well, we could take a short, for instance, if the daily supply zone is nested within a weekly or monthly supply zone, and the monthly and weekly charts are also in the downtrend. So you spot a supply zone at the daily chart, and if you look at the weekly chart, it's actually nested with the weekly supply zone, and weekly is in a downtrend. In such cases, you can take the short. Or you check the monthly chart, and this daily supply zone is nested with the monthly supply zone, and monthly is in downtrend. In such cases also, you can take that trade. But blindly or randomly taking a trade at the daily supply zone is completely not allowed. Also, if the higher time frame supply is in control, do you want to keep on buying that high against a higher time frame supply zone? You shouldn't. This is why we need a multiple time frame analysis, and having a bird's eye view of the bigger picture will help you to take higher trades. That's the significance of using SD range. And multiple SD ranges can coexist as well. What is high in one SD range time frame may be low in another SD range time frame. There are different SD ranges. You must check one range against another SD ranges on bigger time frame in order to assess how high or low an imbalance is in relationship to the bigger picture SD range and other nested SD ranges. So monthly SD range will be used for weekly and lower imbalances. Weekly SD range will be used for daily levels and further lower imbalances, and daily SD range will be used for H4 levels and further lower imbalances. That is how the SD ranges should be used. Each time frame can also have one or multiple SD ranges. The daily time frame can have weekly and monthly SD range imbalances, and H4 can have daily and weekly time frames as SD ranges. So don't go against the higher time frame SD ranges with lower time frame entries. Use at least a time frame as big as the biggest SD range time frame that is in control. Why? The price tends to move from zone in control to the opposing zone. So if a weekly supply zone has gained control, price will normally move to the opposing weekly demand zone. This does not always happen, however. The freshness of the zone can affect these scenarios. For instance, a weekly supply zone that has been tested multiple times while the monthly trend is up will probably not have enough sellers left to move the price to its opposing weekly demand zone. In that case, it will break and the price will break out further towards the next weekly supply zone. So you need to consider the freshness of the zones as well while taking SD zones into consideration. And with that, we have come to end of today's episode. If you have any queries, comments, or feedback about this episode, leave it down in the comment section. I'll be happy to address it. Also, hit the like button if you have liked this video and share it with your friends if you find it useful. Also, subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.